Hey there. The debt ceiling was reinstated at 36.1 trillion on 2nd of January 2025. But as of July 2025, the debt ceiling is 41.1 trillion after being raised by 5 trillion as part of the big beautiful bill. However, the current standoff suggests we are approaching another crisis point. This time may be different. The current funding dispute is raising concern among investors and strategists who say the economic backdrop now is the weakest since 1990. Trump's H-1B fee won't apply to existing visa holders. Officials say the S&P 500 has already relapsed as investors fear government shutdown. In an article titled "Trump adds 100K fee on H-1B visas, cracking down on illegal immigration," the Washington Post says that the market is showing immediate sensitivity. And also we have a historical perspective which clashes with the current reality. If we look at the traditional pattern since 1976, shutdowns have happened 20 times, with the average return for S&P 500 index during government shutdowns being flat. Stocks were positive half the time during the government closures and were higher in the most cases 3 and 6 months later. Stocks have bounced back quickly after most government shutdowns, with investors who stayed committed often seeing gains over the next 12 months. This time could be a little worse. And the reason for that is the weaker economic foundation, because the current economic backdrop is the weakest since 1970. Trump's systematic attack on government institutions has undermined confidence. The refusal to negotiate represent unprecedented political dysfunction. The broader implications for investor confidence and market stability are significant, prompting a scramble among investors to identify favored defensive sectors and vulnerable industries that should be avoided. The high-risk sectors seem to consist of government contractors and defense stocks, healthcare companies dependent on federal payments infrastructure, and construction companies with federal projects, financial services, particularly if debt ceiling is breached. In terms of defense plays, treasury bonds, if no actual default risk happens, consumer staples, utilities, international markets less dependent on US government, these are all the sectors that seems to be defensive. And if you want to talk about the specific risks of this shutdown, I think unlike simple funding gaps, if Trump and the Democratic Party do not come to an agreement to raise the debt ceiling, this could trigger actual default risk. Trump's refusal to negotiate suggests this could be a prolonged shutdown. In terms of investment strategy, I am thinking that we have to expect increased volatility and potential 5 to 15% market decline. Consider defensive positioning in essential services, avoiding government-dependent sectors, and maintaining cash reserves for opportunity purchases, just like Warren Buffett does. In the medium term, which is around 6 to 12 months, I think shutdown fears may seem to be overblown. Markets have historically shrugged off disruption. Quality companies should recover once resolution occurs. Look for oversold opportunities in fundamentally sound businesses because they are most likely to bounce back after a debt ceiling resolution takes place, and it always takes place. And what would I consider as a key risk? Well, if this escalates to actual debt default rather than just a funding gap, all bets are off. This would be unprecedented and could trigger a severe financial crisis similar to 2008 or worse. The critical difference is Trump's systematic undermining of institutional norms, which makes this shutdown more unpredictable than historical precedents. Now, friends, I have come up with this conclusion based on all the media that I'm consuming. There's a good chance that I'm in a media bubble. So those of you who are watching this video, please share your thoughts in the comment section and let me know what you think is going to happen in case we end up with a debt ceiling clash. Is it going to be resolved, or will there be a standoff? Will there be a government shutdown? How long will it happen? And how you differ from my views or agree to my views? Put them all in the comment section. It will help me as well as the entire Share Trek community. Thanks, guys. Have a great day, and I'll catch up with you again in the next one.